Let me just say what everyone else is thinking. Everything is costing more, and no one's talking about how bad it's gotten. Housing prices have increased 47% since 2020. A new SUV for your growing family? The average price is $60,000 for a base model. And you're not even getting heated seats with that. Rent? The national average just hit $2,200 a month. Childcare? $1,600 to $2,000 per month per kid. That's more than most people's rent. Groceries up 30%. Heck, eggs are up 240%. We all saw that. And health insurance premiums, OMG, up 46%. Let's not even get started on home insurance. For me, it more than doubled in just 1 year. Meanwhile, the average American's income, it's barely moved. You're working harder, longer hours, making more money, and maybe even juggling a side hustle, and still feel like you're treading water and everyone else around you is sinking. And while you're out there budgeting like crazy just to stay afloat, wealthy investors are legally writing off hundreds of thousands of dollars in phantom losses, keeping thousands in tax savings, and building real estate portfolios that grow while they sleep. And now Trump's big, beautiful tax bill is handing that same opportunity to you. And personally, I'm ready to take advantage of it. So in this video, I'm going to be telling you the parts of Trump's big, beautiful tax bill that are making millionaires. Don't get left out. Let's go. Let's start with the one that can make you the most money right off the gate. 100% bonus depreciation is back. And I'm telling you right now, this is the crown jewel for investors. Now you're able to write off 100% of certain property costs in year one, not spread out over 27 and a half years like usual. It's kind of complicated, so let me break this down for you like I was talking to my cousin at a barbecue. Okay. First of all, you can't write off or depreciate land. You also can't write off the entire structure up front either. But there are parts of the property that the IRS deems a short life, and these are the things that you can depreciate. These are things like appliances, flooring, HVAC units, cabinets, landscaping, light fixtures, sidewalks. All that stuff wears out faster. And if you get a cost segregation study, you can separate those things out and depreciate 100% of them immediately. On average, about 25 to 35% of the property's value will qualify for this deduction. So let's say you bought a $200,000 rental property. With a good cost seg study, you might be able to depreciate $50,000 or $70,000 in year one alone. That's not a loophole either. That's real paper losses that offset real income. And it could put tens of thousands of dollars right back in your pocket. Now here's where it gets wild. Before this one big beautiful bill, bonus depreciation was on its way out. In fact, we were only going to be allowed to deduct 40% in 2025. And then it was going to drop to 0% by 2027. But with this bill, 100% is back. I have done cost segregation studies on every single one of my rental properties. And I am telling you, it has saved me hundreds of thousands of dollars in paying Uncle Sam. When I had heard this benefit was going away, I was really disappointed because it was one of the best tools that we have as real estate investors. But now that that's back on the table, I'm ready to go all in on rental property buying for the next 5 years. Now, here's something most people aren't talking about, but they should be. This new tax bill reestablishes opportunity zones. And this could be an absolute game changer for anyone sitting on the sidelines with capital gains tax to pay. Let me explain how this works really simply. Let's say you sell some real estate and you've got $300,000 in capital gains tax coming your way. Normally, you'd owe about $60,000 in capital gains taxes right off the top. But under the new bill, if you were to reinvest that $300,000 into an opportunity zone project between 2027 and 2033, you defer that $60,000 tax bill. That's the kind of thing that accelerates wealth building in a really massive way. Okay, let's talk about something that sounds super boring, but it can put real money back in your pocket if you buy real estate in an LLC or in your own name like we do. It's called the QBI, or the Qualified Business Income Deduction. Right now, if you earn income through a pass-through identity, like a sole proprietorship, a partnership, or an LLC, you can deduct 20% of that income from your taxes. This was part of the 2017 tax cuts, but it was set to expire in 2025. The new bill not only keeps it, but raises it to 23% and makes it permanent. So what does that mean for you? Let's say you're earning $100,000 in income through your LLC. Under the current law, you get a $20,000 deduction, With the new law, $23,000 deduction. That's an extra $3,000 that you don't have to pay taxes on. Multiply that across multiple properties for multiple years and you'll see huge tax savings. But the key thing to know is not every piece of real estate is going to qualify for this. If you own rentals yourself or in an LLC or a sole proprietorship, it will count. But if you're investing in real estate through a REIT, which is a real estate investment trust, or a syndication, you won't be able to use the QBI deduction. If you're not sure, this is definitely one of those call your CPA moments, because this is not tax advice coming from me. This is just my opinion and my experience. Now let's talk about something called the SALT deduction, which stands for state and local taxes, SALT. If you live in a high taxed state like California, New Jersey, New York, you're definitely thankful for this one. Under current tax law, the IRS caps how much state and local taxes you're allowed to deduct on your federal return at $10,000 per year, no matter how much you actually paid. So if your property taxes are $15,000 and your state income taxes are $10,000, you're only allowed to deduct $10,000. That cap hurt a lot of high income earners. But the new bill raises the SALT cap limit to $40,000. As long as your adjusted gross income, or AGI, is under $500,000, which most people's are. That's 4 times more than what we've had since 2018. Now let's say you're a real estate investor in California, and between your property taxes and your income taxes, you're paying $35,000 a year. Before, you could only deduct $10,000, but now you could deduct all $35,000. That is a $25,000 larger deduction, which could mean thousands of dollars in tax savings depending upon your tax bracket. But there is one important catch. You actually have to itemize all of your deductions to take advantage of this new higher SALT cap limit. Now look, I don't know your situation. Maybe you've been sitting on the sidelines thinking it's too late to build wealth. Or maybe you've even been waiting for the right time to get started. Or maybe you've already got a few properties and you're ready to scale up. Here's what I can tell you. This bill, Trump's big, beautiful bill, is the most investor-friendly tax code that we've seen in decades. It gives everyday investors just like us access to so many things. Massive upfront write-offs with 100% bonus depreciation, up to 23% on QBI deductions, even as a small landlord, fresh incentives in new opportunity zones, freedom to write off huge losses and keep moving forward, the SALT cap increase if you live in a high tax state, capital gains tax relief so you can keep more of your appreciation, and yes, 1031 exchanges are staying put. And this is huge because tax strategy is not just for the ultra rich anymore. It's your ticket to play the game just like the wealthy do. And me, I am not missing out on this. So if you're ready to finally build wealth through real estate, this is your moment. Don't wait for someone else to explain it all after this window has closed. I built a 7-figure portfolio and 6-figure income through just a handful of quality rental properties. And these are the exact type of opportunities I use to do it. And now I teach everyday people how to do the same thing. So if you're serious about getting started the right way without costly mistakes, make sure you hit subscribe and check out the link in the description below to get access to my free masterclass on how to get started with real estate investing. You've waited long enough. Until next time, keep building your wealth brick by brick.